Hello students, for this video clip, we are going to practice about the factoring process. This factoring process can explain why the bankruptcy incurred in black. That means that the company made a profit but went to bankruptcy. So this situation is based on some credit transaction. Credit transaction. We just started up a cell phones merchandising business. We purchased the cell phones on credit and sold the cell phones on credit as well. That means that our customers they use their credit like invoice. We also use the credit our invoice when we purchase the cell phone. So there's no cash involvement, cash transactions when we started this business. Today we need cash to pay vendors, but we haven't yet received cash from the customers. So no cash now on hand and no one a bank lends us loan. So that's the problem. How can I figure this out? If we cannot figure that out, then that is the bankruptcy in black. Why? Because we made the revenue, but we cannot pay any cash to the vendors when they purchase the smartphone. Okay, we are the borrower, the merchandiser, and the manufacturer. Here, goods, now the manufacturer's invoice delivered to the merchandisers. And we have an obligation to pay, let's say $80,000 to pay in 30 years. We don't have to pay right away, but in 30 years, 30 days, sorry, 30 days. And then once we got these goods, smartphones on hand as an inventory, now we sold this inventory to buyers. Now the buyers also use their credit and we send them invoice, our invoice, the merchandise invoice with the inventory. And then we have a right to receive cash in, let's say, the 60 days. And then we sell $100,000 for this inventory. The cost of the inventory was the 80, but no one merchandiser want to sell at the cost of the inventory, so 100K. But you have to remember that 60 days is the cash when we receive the cash, but we have to pay in 30 days for this inventory purchase. Now, in 30 days, what happened? In 30 days, what happened? Okay, the merchandiser doesn't have cash to pay this $80,000, even though it has a right to receive cash. So these merchandisers now searched for lender. That's what a mafia does. So the merchandisers brought this AR invoice, the cash to receive, the right to receive cash, $100,000 from the buyer to the factor, which is lender. Now these factors, the check the credit of these buyers. Okay, is this buyer has the ability to pay this $100,000 within the term in 60 days. Now this factor decide to lend the money, like not the full amount in case there's something wrong. So like 15%, let's say just 50% discount out of 100K. So the cash now 85. So if you get the 15% discounted in the 85K, okay, then merchandise, okay, because the merchandisers is desperately need the cash to pay this $80,000 right away in 30 days. So inevitably, merchandisers should take this the agreement. They should take this 85K with this agreement. Then finally, these merchandisers was able to pay 80K to the manufacturers. So now avoid this bankruptcy in black. Now the factor gave notice to buyers. Oh, I have your your invoice. So you don't pay this 100,000 or $100,000 to this merchandise, but you have to give me this $100,000 because I have your AR invoice. So in 60 days, cash amount $100,000 should be paid to this factor. Okay. Now the last step is this. The rest amount of $15,000, the remainder should be now paid to this merchandiser, because $85,000 was the cash, the borrowing, the rest amount, the $15,000 out of 100K. But what's benefit? What's benefit for the factors? Right, the factors definitely take the fees and some interest for the 30 days, because the merchandiser borrowed the money for 30 days, from 30 days in 30 days in 60 days, and some insurance fees in case they couldn't pay, the buyers couldn't pay this $100,000. So after this subtraction, some amount of money is now paid back to the merchandisers. Those are very important financing procedures in the non-financial companies. Those are not the financial companies like investment bank or commercial banks or corporate banks, but there are many small-sized factors in the business where they purchase the debt. They purchase the AR invoices from the merchandisers who desperately need cash right away, and then shows this financing procedure between the borrowers and the lenders. Okay, see you in the next video clip. Bye-bye.